All right. Well, welcome everyone. This is Scott Thompson, Senior Manager with Schwab Coaching. Great to be here with you today. Just got back from the Market Drive event that we had in New York, and I was able to visit with some of you and asked and talked about some different things. So it was great to be there with everyone. Today, we are going to go over just a brief recap of what we've been doing. I want to answer some questions that have come up in the surveys and in the comments and things like that. I want to show you our new 2 Green Arrow investing plan buy orders that have kind of happened during this last week, and but primarily focus on the daily routine. One of the things that comes up a lot is like, well, what do I do every day? And if everything's automated, which is kind of the goal of what we talked about, then you don't have to do a whole lot. But if you're going to be a little more active, like that investing plan that we introduced last week, then I'll show you the daily routine and kind of how to actually implement that trading plan that we talked about. And one of the things that's important about any type of rule set is usually you have your defined parameters, but then you're going to have some nuances that are associated with that plan. So we want to talk about some of those today too. So anyway, let me share my screen here and go over this important information. Remind everyone that the information we cover today is for general informational purposes only, should not be considered a recommendation of individual stocks or any strategies or anything like that. All investing involves risk. We are using paper money, which has some differences to your real money accounts. And then remember that all investing involves risk, including the loss of principal. Now, let me jump over here to our slides and just kind of recap again. One of the things that we've been doing is we're implementing 3 different little plans that we have. One of them is to systematically or theoretically invest $5 per day in some sort of tracking mechanism of the S&P 500, or you could use the NASDAQ. We're actually doing both. The way we've been showing this, and we'll have a special live only session today at the very end where I'll show you the ETFs that we're looking at. But the idea is to invest regularly. This is stock investing for beginners. So, when you're starting out, I think you want to just start to develop some habits. Now, if you don't have the ability, if the broker you use doesn't have the ability to automate your daily investments, then what you can do is just save that money, every day, every week, or every month, whatever works for your schedule, but just get something that you can do consistently and then invest that money where you feel appropriate for your trading. And what we're doing in our paper money account here, and I'll show you that for our live only session today, what that looks like. The other thing that we're doing is we're investing $50 every week on Mondays in the top 10 holdings of the equities in those tracking ETFs. So we've been talking about using stock slices on Schwab. Stock slices is on the schwab.com. It's not in Thinkorswim. So that was one of the questions that came up in the survey. And also a gentleman asked that on Saturday when we were at the New York Market Drive. This is done on the schwab.com channel. The last 2 sessions, I've shown how to do that and what it looks like. But in order to simulate that taking place in Thinkorswim, I go in, and I'll show you this today, but I go in and right click on the position and adjust the position as if we were buying $5 of each of those 10 holdings in Thinkorswim. So let me show you what that looks like right now. And this is really cool. It's starting to get kind of fun because we have a history now of doing some trades. So here you can see the top 10 holdings of the tracking ETFs for the S&P 500 and the NASDAQ. There's a lot of overlap. There's Netflix is in the top 10 of the NASDAQ 100, and so I took that one out just because it was so expensive. And so these are the 10 stocks that we're using: Apple, Amazon, Broadcom, Berkshire Hathaway, Costco, Alphabet or Google, Facebook, Microsoft, Nvidia, and Tesla. And so, again, in your own portfolios, you could go to schwab.com. I'm not going to show that today, but you can go to the stock slices, and this is not a recommendation to use stock slices or invest in these stocks. It's just an example of how you could do this. But in order to simulate that, what I'm doing is I go in every Monday and I buy $5 worth of each of these stocks. And the way you do that is you just right click on the symbol and go down to here to adjust positions. Now, Someone asked earlier, why don't we click on add to positions? Well, add to positions is actually kind of creating a new trade for buying full shares in the thinkorswim platform. And so again, to simulate those stock slices or those little pieces of the stock, we're going down here to adjust position, and then I just take $5 and I divide it by whatever the current price is, and I end up buying partial shares, 0.01, 0.03, whatever it is. And then I, essentially send that order, and this is what it looks like. So we've been doing this now since the 9th of June. And so let me show you the quantities here. These are the different quantities that I've bought and the purchase prices. And what starts to happen is we start to dollar cost average. So you can see this will keep track of our average price per share on each of these. So, I bought like, what's that? 2% of a share here, 2.5%, 2.5%, 2.48%. And so, we have an average price of about $200 on Apple. And right now it's trading at $200.09. So we're actually down, down a penny on that. But you can see that I've done that for each one of these. And so I'm just kind of simulating what you would be doing in stock slices on Schwab.com. Okay. Again, just to re-emphasize, this is not a thinkorswim feature. You can view your stock slices positions in thinkorswim, but there isn't a way to do a partial share purchase in thinkorswim in your real account. That would have to be on Schwab.com using the stock slices. Okay. So we are doing that, and I've been doing this every Monday, and you can kind of see here, some of them are up, some of them are down. We're net positive on our positions. And the other question that came up is like, well, what if these guys pay a dividend, or what if the stock splits? Well, even in stock slices, if the stock splits, then you would get that appropriate split amount. If you had 10 shares and it's split 2 for 1, you'd end up with 20 shares at the end of that. Well, in our case here, we have 0.0996 shares of Apple. So if that split 2 for 1, we would just double that. Okay. The dividends are also paid out, and dividends are not guaranteed, and they may not continue on those stocks. But if it paid a dividend, then we would get 0.996% of that dividend. It's, it does work when you're doing the stock slices. And again, you can refer to that stock slices page to see, more details about that. Okay. But that's the first thing I wanted to show. And then I think it's Ellie's asking about the charges. For trades that are done online on Schwab.com, there is no transaction fee or commission on those, Ellie. So no, to answer your question there's not a charge for those. There might be like I've seen a 1 cent fee sometimes, so it just depends on your account. But from what I see there, these stocks, if you're doing it online, do not have a commission attached to them. All right. So let's go back to the slides here, and I want to show you the third thing that we're doing in this account, which is we introduced this plan last week. So you can go back and get the details on it. But the other plan, let me unhide that slide. Well, so we introduced a trading plan. I called it 2 green arrows. We're using a 50-period moving average and a MACD histogram. You can go back next week and see that. I'll be showing the charts on a lot of them today. But I wanted to go over the daily routine. One of the things that comes up a lot in, when you're starting to invest, when you're starting to be a little bit more active, and again, this is stock investing for beginners. I think some of the best ways to get beginning is just start saving money, and then as that money grows, you can start investing it in different things. You can check with an advisor to get what would best suit your needs. And again, nothing we talk about here is a recommendation. But as you're doing a little bit more of a routine or a plan, which is what we introduced last week, then part of that plan, and I think a critical part, is the daily routine. So if you remember, last week we covered this, and it said, the very first thing that we want to do when we do our daily routine is review our open positions for a stock adjustment signal or a stop adjustment signal. And so let me go over now. In the plan, we had a couple stop systems or a couple exits. The initial stop order was to set the stop 1% below the 50-period simple moving average. Now, there's nothing particularly important about that. It's just a number that I chose. You might be choosing something different, but for our plan, we're using 1% below the 50-period moving average. The idea being that, when we get our buy signal, we're trying to stay in this intermediate to longer term investment. Hopefully, the stock stays above the 50-period moving average forever, but it may not do that. So if it doesn't do that, if the trend changes, then this is basically kind of our first line of defense, is that if it drops below that 50-period moving average by 1%, then we're just going to get out of the trade. All right. Now, that's great. The other question, though, is like, okay, I've been in the trade for a little while. What do I do with it after I'm in it? Well, the two stop adjustments that we'll look at in this example trading plan is if we get a new buy signal, on a stock that we own, if we get a new buy signal, we're going to move the stop up as if we bought it that same day. We have one of those that took place today that I'll show you how to implement it. And then, if a stock does start to change the trend and we bought it when it had the 2 green arrows, but now there's 2 red arrows, now we're going to go and adjust the stop. Now, this one's a little bit different. The rule, again, this is just our sample investing plan. The rule is to say, well, it closed below the moving average. We're going to take the low price that day, and we're going to set the stop 3% below that low price. Now, some people ask why 3%. Some technicians believe that a support level is not broken unless it's broken by 3%. So that's kind of where this 3% comes from. And so whatever the low price that day is, we're going to adjust the stop. Okay. Now let's go look at what's happened over this last week since we introduced this plan. This is getting real fun for me. I'm doing this every day. I'm doing the daily routine, which, before I do that, let me go back. The daily routine, look for stop adjustment signals. What else do? We review our watch list for what? Buy signals, and we evaluate those opportunities. And then we just want to be aware of our earnings and dividends. So I want to walk through this. The rest of our time today is go through this daily routine, and then we'll talk about some of the nuances of this plan as we go together. All right, so let's take a look here at our 2 green arrow system. Now you can see these are orders that were all given buy signals over this last few weeks that we've been involved. And right now I have 17 positions. Now, again, kind of recap a little bit of the rules that we talked about last week. We're going to invest up to about $500 per position, which is based on up to 5% of our $10,000 portfolio that we've kind of started with. So the idea here is if we only invest up to 5%. Now, you guys, I know you don't like math and it's pretty early in the morning, but help me out. If I invest up to 5% of my portfolio or our sample portfolio in any single position, how many positions could we have? So that's the question. And then while you're typing that in, we're also looking at a risk parameter of about $50 per position, which is about 0.5% of the account. So we went through the math last week. We'll talk about it a little bit more today, but these stocks here gave what I considered a buy signal following those example plans. So I just want to go through that. Now, there's a couple features that are really cool on the Thinkorswim platform. Number one is that if you wanted to go through your stocks very quickly, you could go to the watch list and click on that drop down menu, and you could get a listing of your current account positions. Now, I'm not going to use this one today in our class because I have some positions in there that we can't look at because it includes the ETFs, and I don't want to show those during our archive session here, but we will look at those later after our session's over in a live only bonus. So what I did is I actually created a watch list, which you can go right here. You create a watch list and you name it. And I just called it 2 green arrow holdings. And then I typed in the symbols of all the stocks that have been purchased so far. And then I saved that. And so that's what I've got over here. And so again, I want to go through this daily routine with you and talk about these individual stocks that we've purchased. And we're going to start off with, if I just click here now, we've talked about this before, but if I have this number 3 linked up right there, then I can link it to my chart. And now whatever stock I click on in the list also has that, it's going to show over here. So that's kind of what we're going to do. And we're on a 6-month daily chart here. And I want to just go back to when these buy signals happened and then show you what I did. Okay, so we reverse a little bit. Now, this is one of the nuances. Now, if you if you're not taking notes yet, right now you need to take some notes, okay? One of the challenges, anytime you use an indicator-based rule set, like we're using a 50-period moving average and the MACD histogram. Now, the buy signal is when the stock gives two green arrows on a rising, now write that down somewhere, on a rising 50-period moving average, okay? So this moving average obviously is rising. The moving average actually went green way back here. Another comment that's been made is, well, how long is that green arrow green? The green arrow is green until it turns red. But that being said, if we were to go back a few days before this buy signal occurred, and we're looking at the MACD and it's red. Now, part of the daily routine is just, you're looking through your watch list for opportunities right here, okay? And so this day right there, would that be a buy signal? Now, I want everyone to kind of participate, because the goal here today is to help you identify the true actual buy signals in this particular plan, but this will hold true for whatever your plans are, okay? But you technicians out there, what do you notice going on with these stock, over the last several weeks here? The stock's been trading kind of sideways, okay? The stock's trading a little bit sideways, and so one of the nuances of this particular plan is almost every moving average, when the stock starts to trade sideways, making similar highs and similar lows, is the moving average will start to oscillate a little bit. So it would look like it's up sometimes, look like it's down other times. And so here's the nuance, is usually if the stock's been trading sideways, this particular plan will look for a breakout. We want to see the stock breaking that resistance in addition to having the green arrows. Okay, I know this is a tough concept to get when you're first learning this, these types of investing plans and rules, is these little nuances. So, this could be a diagonal breakout. Usually for me, that's a little bit longer term than just like 4 days. But I have an example of that I want to show you here. Okay, so as we go through this, and then Wiley had asked about the live only. Those we'll probably end up doing about once a month, Wiley, where I just want to give an update on what we're doing with the ETFs that are tracking the S&P 500 and the NASDAQ 100. But today we're going to have a special session, okay? All right, so I'm going to go through this, and then we'll take a look at all the other holdings here real quick. But, okay, here's the next day. Now, is this a buy signal? Okay, now when you're doing this is a part of our daily routine, and I've been doing this every day since we started, is I'll just look at the watch list and say, okay, does the stock have a buy signal? Now, how long does it take to identify that there's not two green arrows here? Doesn't take any time at all. In fact, I'm just going to focus on the MACD. I know the stock price is above the moving average, so that's green, so I'm just waiting for the MACD to turn green. Is this a buy signal on this day? This is on the 20th of June. The answer is no. We're done with our analysis. How long does that take? A second. So, even though I've got 17 holdings here, I can do my analysis very quickly. If I have the position open, then I can also look for two red arrows. And so usually the stock will be below the moving average. And so that's where I key. If I have an open position, I just say, well, is the stock below the moving average? The answer to that's no. Then I'm done with my analysis that day. Don't make this any harder than it needs to be. That's what you're doing. As part of your daily routine, you're just identifying, okay, well, do I have a sell signal or do I have a new buy signal? The answer is no, we're done. Okay, next day. Do we have a buy signal? Okay, this is the 25th now, or 23rd. Okay, do we have a buy signal this day? No, we're done with our analysis. Okay, next day. Now, you can see we got a green arrow that day, right? This is on the 24th of June. The stock's above the moving average, but it had been trading sideways. So what else are we looking for? Write this down in your notes. This is so important. You need to get this. If the stock's been trading sideways, then we also want to see a break of that resistance. Now, we'll talk more about this in future sessions, but this little ceiling, these last highs, that's where resistance is. It's like a ceiling, or we call it resistance in the stock market. But in this case, we wanted to see a break of resistance and the two green arrows. Did we get it? All right. So there it is. We got a buy signal. Okay. Now what do? Well, now we go buy it. Okay, based on our rules. Now, again, I'm not telling you that to this buy a ABBT, this buy signal happened a few days ago, so you can't do that same thing anyway. But the point is to take action. One of the things that's very important when you're starting to trade rule-based trading, Okay, not just the systematic investing that we're doing in some of the other areas, like every Monday we're buying $5 worth of the top 10 holdings using stock slices. Okay, that's a different type of thing. When you're doing rule set trading like this is what causes you to take action. And what do? Well, we buy it near the close there so we can confirm the breakout. Where do we set the stop? Well, the initial stop goes 1% below the moving average. Well, how do we tell what the moving average is? Let me go over here. Just give you a pointer right here. So right there, if you go up to the top of the page, do you see the number like right here? So right there, the moving average that day was at 132.28. So we would just literally take 132.28 times 0.99, and that's where our stop goes. So we're getting in about 138, and we have a stop about 131. Okay, that's where the, that's where that stop goes. And you can kind of see here in this case, if I did my math right, the stop's at 130.95. Now, many of you are looking at that and say, well, crud, that's like a long way away. Yeah, it is a little bit long way away. And this is a pretty expensive stock. So we only bought 3 shares. Sometimes, the stop will be 10% away. Sometimes it's 5%. Sometimes it's 12%. Again, there's nothing particularly special about 1%. It's just what we're doing, trying to let the trade play out. Okay. Now, ABT, what's happened? Okay, well, write this down in your notes somewhere, and I see some questions. I'll get to those in a second. Is after it breaks out, okay, write this down. After stock breaks out, you want to prepare for the stock to retest the old resistance as new support. That happens quite a bit of the time. Now, sometimes the stock just keeps going up, which is why we like to buy breakouts, because sometimes it doesn't retest and it just keeps going up. Sometimes it fails and it breaks back down below the resistance. But once we're in it, number one is we're okay with the risk that we're taking. Because why? Well, because we went through the process. What am I comfortable losing? We decided that at the very beginning. You guys need to do that for your own investing, is to decide how much are you really, truly willing to risk on an individual trade, because guess what? Some of them are not going to work. Some of them are going to be losing trades. Now, we got into Abbott next day, kind of give that little spinning top. We think, okay, going to come back down maybe. Okay, now we're losing money on ABT. But here's the question. As part of our daily routine, let's go back and look at the slide again. Okay, as part of our daily routine, review open positions for stop adjustment signal. How long does that take? It doesn't take very long. Man, I wish somebody beat this into my head when I started. I would sit and fret and worry about this particular situation. It's like, well, that's going to fall tomorrow. I might as well get out now. Why let it go down all the way to my stop? Because that's the plan. Okay. If it doesn't go and hit the stop, then we're still in the trade. Well, next day, what happens? Next day, we get a little green candle. Next day, we get a little bounce off that 50-day moving average. And that's where we are today. There's nothing to do. We have a red arrow. Okay. Do I have 2 red arrows? No. So guess what? I'm done with my analysis. I don't have anything to do. Now, write this down in your notes also. Very, very critical. Okay. Once you get into a position, you do not lower your stop. Now, why? Because if you get into a position and you set your stop based on the rules that you have, then you're setting up your trade based on acceptable risk where you're comfortable with that loss. And if you lower the stop, then you end up losing more on your trade. And so guess what? Yeah, we're going to get picked off on some of our stops. Here's my answer to that. Welcome to the market. It just happens. Okay. But you don't want to lower your stop, because then you get into a situation where you're risking more. You're starting to feel uncomfortable. And then you lower your stop again, and you start losing more and more and more money until you get to the point where you can't handle that loss anymore. And then you get out, and guess what happens? You've probably all been there if you've been in the market very long. The stock bounces back up and it takes off like a rocket, but you're not in it anymore because you kept lowering your stop. You took a bigger than acceptable loss, and you're very frustrated. Okay. So what you want to be careful with then is to set up the trade based on acceptable risk at the beginning. Okay. Now let me go back and see. There was a question from Steve. Aren't you supposed to buy low and sell high? This is a great question. Okay. Now this particular plan, okay, is not buy low and sell high. It's buy high and sell higher. That's kind of the idea when you start looking at indicator-based rules. Sure, we would have liked to have bought it here. In fact, in future classes, we will talk about a bounce off support entry signal. And I have a really good little short, YouTube short that I did on buying a bounce and 3 ways to do that, or 3 ways to buy that bounce off support. But that's not this plan. Okay. The other thing is we're going to buy high and hopefully the trend continues and sell higher. So it's a great question there, Steve. Don't feel bad about asking the question. Feel free to answer those. Brett's doing a great job in the chat and he'll answer those questions that I don't get to. Okay. But that's part of the nuances here. Now, what I did, and I've got this holding here, but I'm just going to type in. I also wrote in the positions that we have open. Let me go through these again very quickly because we're running out of time here if I want to try to do the live session. Okay. So AMD. Okay. AMD, when did we buy it? Okay, we bought it here. I put little green arrows or little green circles when we bought it. Set the stop. Where's the stop go? 1% below the moving average. So bought it there about 130. In fact, I got my notes right there. Okay, got in about 127, had a stop at 103, risking $23 per share. And I know you guys are freaking out. It's like, oh, that's crazy. Why are you risking so much? That's the rules. Okay, and the stock was really far off the moving average. So it just happens to be where it was. Now, does this have a current buy signal on it? Well, the MACD and the moving average are both green. So technically there's a buy signal. It's been a buy signal ever since the MACD turned green way back on here. So, but you know, what I'm trying to do in our class portfolio, our example portfolio, is act when the signal happens. So now, again, part of our daily routine, let's do this all at the same time. Do I have 2 red arrows? Okay. Do I have 2 red arrows? You guys chat in the answer. No, no 2 red arrows. So we're done with our analysis. We don't have anything to do here. Is there a new green arrow? Nope. So we're done again. Okay. So that's AMD, BAC. Okay. BAC. BAC was trading a little bit sideways. The stock broke out. We got our green arrow. I saw the signal that day. We bought it the next morning and the stock's been going up. Okay. Do we have 2 red arrows? No. We're done with our analysis. So don't make this any more complicated. It's like, well, yeah, but what if the stock goes back down? Then we're going to give back some of the profit that we have. Okay. Welcome to the market. Okay. Here's C. Okay, why did we buy C? Well, MACD turned green. How come we didn't buy it way back here, Scott? Well, I don't have a rule set that tells me to buy here. If I had a rule set to tell me to buy here, I probably would have bought it there too and have been losing money and may even stopped out. Okay, again, it's not the rule. The rule is the 2 green arrows, rising 50-period moving average green arrow here. Okay, do we have 2 red arrows? No. Do we have a new buy signal? No, we're done. Okay, COF. Okay, COF, trading a little bit sideways here. I got the green arrow about the same day we got the breakout, or the next day, got in the next day, you can see there. Actually, give me a little vertical line. So we got in there on the 24th. Stock's been going up. We're making a little bit of money here. Initial stop, again, 1% below the moving average. Do we have 2 red arrows? Okay, look at the right side of the chart. Green, green. We're done with our analysis. Does that make sense? Okay. Let's take a look at COP. Now, this one's more fun because it's got something we can talk about. All right. COP. Let's go back. All right. COP. So here, the stock or the MACD gave a green arrow back on the 3rd of June. The stock actually was trading sideways here, but the moving average is falling. So this is not a buy signal. Okay, the moving average is falling. It's not a buy signal. We start to see the sideways movement here. We can say, well, it's got some resistance in that 95 level, and we move forward. Okay, and I just didn't see it until right there. Okay, and so I was looking at it. I thought, oh, we have some resistance, and I waited for the moving average to start rising because why? Because that's the rule set that we set. We can't buy it if the moving average is falling. We're waiting for the moving average to rise. Okay. Now, again, as we go through this plan, I see some questions about like, well, how come we're not doing this or this? You can do those things. If you want to try something different, I just introduced a really simple plan that helps you to be consistent in your trading. Okay. So we got in there here on this day. Why? Because the moving averages started rising. We had 2 green arrows and we had broken the resistance, and I bought the shares up there around 96, and we set our stop 1% below the moving average, okay, which ends up having a stop here at about 88.24, okay? So now here's kind of interesting. Next day, do we have anything to do? Green arrows, we're done with our daily analysis, okay? Next day, big bearish engulfing candle, stock starts to drop. Do we do anything? Well, MACD's still green, moving average is still green, okay? Nothing to do. We're done with our analysis. Okay, it's important that you get this, all right? Next day, the stock closed below the moving average. The MACD went red. We have 2 red arrows. If we go back to our rule set, what does our rule say to do? Okay, our rule says to Two red arrows when the stock closes below the moving average. Move the stop to 3% below the low price of the day. The stock closes below the moving average. Let's go look at that again. Okay, the rule now says we're supposed to put the stop 3% below 89.04. If you go look at the L value right there, the L value, we would go 3% below 89.04. Okay, but 89.04, if we clear this out, 89.04 times 0.97. That's how you get 3%. That would be 86.36, and our original stop was at 88.24. So here again, this is the rule. This is the important part here, is we don't lower the stop. When I got in, I based my trade on this acceptable risk with the stop being here. Now, we haven't said this yet today. We say it all the time, but a stop is not guaranteed to fill at the stop price. That's just the triggering mechanism that gives it a market order and then becomes the next available price. It could be significantly lower than 88.24 where our stop is, but that's the triggering mechanism, okay? Now, I don't want to lower my stop, so on this particular day, I didn't do anything. I recognized that we had the two red arrows, but I didn't do anything. Didn't get stopped out. I'm done with my analysis. This is an important feature here because one of the things that we typically do as new traders and new investors is we tend to overreact, or we tend to panic, and we tend to get very fearful. All those fun, uncomfortable terms, we get very uncomfortable with those things, and we start to do things we shouldn't be doing. Okay, I can't tell you how many times I moved a stop up or just decided to get out, and then the stock actually didn't ever hit my original stop, and I could have been in making money a few weeks, days, months later, but I didn't do that. So I want to help you avoid doing that. Let the stop do its job. Its job is to keep your hands on your seat and not on the keyboard, okay? Next day, okay, stock came down, still didn't get stopped out. Day after that, got a little bounce off support, got a new green arrow, okay? Okay, not a buy signal. Why? Because MACD's red, and the stock's kind of back in this oscillating or resistance zone. I would say a new buy signal is not going to happen on this until it gets back above that 94 area. Okay, so this is kind of where we are today. The stock right now is, if we get another three red arrows, if it closes below the moving average, again, we're probably in a scenario where we're not going to be moving the stop because we don't want to lower our initial stop orders. All right, so. And then there's a question in there from Speak Truth about, end of day values. Yeah, we're basically using end of day values there because we can't, like right now, this stock was below the moving average and it was a red arrow, but now it's back above the moving average. So now it's green. So we're going to wait till the end of the day before we do kind of that daily routine analysis there. Does that make sense? All right. So that's looking at COP. Let's take a look quickly at I'm not going to do all of them, but let's go look at Disney. Disney has kind of fun. I want to show you this one. So Disney, we bought back on this day. Okay. Why did we get in that day? Well, because at the end of the day, when the market closed, I saw, we have two green arrows on a rising moving average. The stock's kind of uptrending. It's not consolidating. And I set an order to buy that. I think we put an order to buy it probably near the close at 119.52. Stock opened up down a little bit the next day, so we probably got a little bit better fill price. The stop goes where? 1% below the moving average. Okay, now again, the daily routine, that's our focus for today. And this is kind of where we're going to end our live session, is on this example here. And then you guys can go through the other ones that we've got and kind of check those out. But what are we looking for? Let's go back to the slides real quickly, because I want you to get this takeaway. When you're in a position, your daily routine is to do what? Review the open positions for a stop adjustment signal. What is the stop adjustment signal? It's either two red arrows or what? A new buy signal, right? The new two green arrow buy signal, if I wasn't already in the trade, then I could buy the stock. And if I bought the stock that day, then I put the stop 1% below the moving average. So let's take a look at Disney over a few days to do our daily routine. Now, everybody, just look at the right side of the chart. This is how you do this daily routine. You come home from work and you're tired and you put the kids to bed and now it's 8 o'clock at night or whatever. And now you can finally have a moment to look at your stock. Okay. Next day. Oops. Okay. So here we are. Next day, do I have two red arrows? Well, the MACD turned red, but the stock's still green, so I don't have anything to do that day. Next day, we go forward a day. MACD's still red, stock's above the moving average. We're done with our analysis. Again, this doesn't take very long. Next day, okay, green arrow on the stock, red arrow on the MACD. Do we have anything to do today? No, we're done. Okay, next day, same scenario, nothing to do. Next day, nothing to do. MACD's turning red, going down. Stocks consolidating a little bit. Those of you candle gurus, what kind of candle do we have here on the 23rd? Stock's been consolidating a little bit. Small body, long shadow. That's called a hammer candle pattern. That might be a bottom. Old resistance was over here at about 113. The low that day was about 115. So it might come down another few days, but might bounce, right? Next day, stock goes up a little bit and we're up. And again, nothing to do on the daily routine, right? It doesn't take very long to determine, hey, the stock's still above the moving average. That's green. I don't have anything to do today. Okay, next day. Okay, this is kind of fun right here. Okay, where are we? What's today? Today is the 30th. What just happened today on Disney? Does everybody see this? Now, again, we could wait till the end of the day, speak truth. We could wait till the end of the day and say, hey, I don't know if this is going to be a green arrow at the end of the day, because the green arrow here is just the buy signal on the MACD. We talked about how to set that up a couple weeks ago, okay? But that buy signal could go away. So you may want to wait till the end of the day before you take action. In our plan, we're just taking action as we see that, and that might be during the market day, it might be afterward. But there, based on the rules, again, not a recommendation, but based on the rules, that's green, this is green, this is a new green arrow. So what do we do here? Well, our existing stop right now is at, where's that one? The existing stop's at 99.17. So what would we do? What's the rule? Okay, now this is, again, it's okay to go cheat and do an open book, right? We can go open book. What's our rule? New two green arrow, buy signal, move stop to 1% below the 50-period moving average. Let's go do that, okay? And let's look, how do we do that? Now, this is really fun. Okay, the moving average, let's calculate where the stop should go. The moving average is where? Okay, look at this number up here. Okay, 107.89. We're going to go 107.89. Now, how do I get 1% below that? I just multiply that number times 0.99. And our new stop is going to be 106.81. So check this out. Now this is a tool on Thinkorswim, but I can left click on this and drag it up to about 106. You can kind of see the number in there behind it. We're going to adjust it, okay? And it moved my stop up to 107.08. Now I just have to double check. It's like, oh, that's not right. I need 106.81. So how do I change that? Well, I go to edit, and I just need to move my stop here, change the number to 106.81, all right? And hit confirm and send. Oops. And then we want to double check that. Okay, move the stop to 106.81. Check to see if there's any notes. This is a stop order, not guaranteed to execute at that price. That's just a triggering mechanism, could be filled much below that. And we send that order off. And now my stop just got adjusted and I'm done with my daily routine. Okay. And then just for a quick review here, you can see all your existing stop orders. If you go up to working orders, you can scroll through them here as well. Okay. But during our daily routine, you know, several stocks, I've got 17 of them now that have given buy signals. Now you can go through, I've added the sectors here. We have a fairly diversified portfolio. They pay a dividend. That dividend yields over here on the right side. In the future classes, we'll talk about some dividend questions as well. And so this is what I wanted to cover today with you, is to how to do the daily routine. So hopefully you've got that today. All right. And hopefully that will help you make a decision on kind of how to do that, some of the nuances. If the stock's trading a little bit sideways or consolidated a little bit, look for that breakout. We'll talk more about that in future classes. All right, so we are done with our live recorded session